Welcome everyone to our audit committee meeting. Appreciate you all being here on Tuesday night before. Would you lead us in the pledge and give us an invitation?
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all. Our Father in heaven, we are gathered this night to look after the financial reports of the city. We're thankful for the opportunity to serve in this capacity and to be able to offer some help to our good city. We pray that thy spirit will be with us and help us as we do our work tonight and enjoy the fellowship of working together. And these things we say in the name of Jesus Christ. Amen.
Amen.
All right, discussion and or action to consider the April 15th, 2021 audit committee. Any corrections that everyone's had a chance to review?
One.
Yes.
There's a little tiny one. I noticed that Dallin Barker's name is spelled two different ways right at the very end of the minutes. And I think the IN is the one that's correct, not the EN.
Oh, D-A-L-L-I-N. Phyllis? Yeah, there's a Dallin. Dallin, actually, it's D-A-L-L-I-N.
D-A-L-L-I-N.
Okay.
Okay.
My name is not spelled correctly. It should have two S.
Okay.
And then I have a question. I'm not sure.
Hold on, let me find that word. You said on page 2?
On page 2 at the top of the page, first one.
Oh,
And then the other thing is on page 12, in the middle of the first paragraph, it says that it was collected for about 5 years. That city growth, that's city growth. Is that so? It kind of, unless city growth is an entity that.
I think it should be Pleasant Grove had sued. It's Pleasant Grove City had sued
Pleasant Grove.
on that road, the transportation utility fee.
Right.
Collecting.
it's on page 12 on that one?
Page 12, first paragraph, about midway down, left-hand side.
Oh, that's Pleasant Grove.
Yes, Pleasant Grove. Pleasant Grove City.
And let me say that it's amazing that you could have 15 pages of minutes and only find a couple of little things.
Yeah, very good job, Jim.
Councilmember Ashton.
I didn't see anything. And normally I catch those, but I had to very quickly. So.
Sharon, this is for anybody? Mayor?
Nope.
John?
Nope.
Okay, now look for a motion to approve the April 15th, 2021 minutes.
I'll move.
Moved by Mayor Ruby,
Second it.
seconded by Councilmember Ekstrom. All in favor, say aye.
Aye.
Any opposed? Okay, now we'll move into our active agenda. Public comments. No public in attendance tonight.
We have some online.
No raised hand as of yet,
No raised hand. Do we have individuals online with us?
just one.
Okay, good. Let's move on to item number 3, then discussion on quarterly financials. Turn the time over to Jamie Jones, our finance director. Say that again.
If we can move 4 to 3.
Oh, yes, that's correct. There's been a request to move item 4 up to this point and push 3 back 1. Have a motion to do that?
Second.
Okay, been moved and seconded. All in favor? Aye. Any opposed? Okay, we'll go to item number 4 now. Again, Jamie Jones, finance.
All right.
Fiscal year audit.
Yes.
Let's
So
do
we're here. We're here. It's been a long time coming. I'm actually going to thank Larry very much for his hard work on this document and actually turn the time him.
Yeah, so just to give you an idea, remember the last time we came, or last time I came, it was a bit of, but we had to go through a lot of things. And it really wasn't a lot of time between that meeting and when the year end ended. So therefore, the 2021 books were not in a very good shape when we came and started looking at it, and Jamie taking over that position. Just to let you know, we ended up doing over 500 lines of journal entries to get the financial statements for where they are now. So it was quite an effort, which is a bit bothersome because that means that there was financial information that you use, as the council uses and the audit committee looks at and see the welfare of the city, what that was. And so the goal is obviously to keep those financial statements up to date and to a point to where everybody can look at them and rely upon that information. So that's just kind of give you an idea of what the effort was to get that. Not anything I anticipated, but then when I thought about it, well, there wasn't a whole lot of time to implement any of those kind of changes because we didn't issue until the middle of, I think, of April.
Right.
So that only gave, a month and a half, 2 months to get all that before, then you go back in the whole year stuff. So yeah, I was a little naive. I guess I should have anticipated that, but that's okay. A lot of that work is now done. We found a lot of different things as we went through it. That Jamie will bring up in different meetings about different vendors and how the money is flowing in and things like that, because it makes it a little more complicated when it comes in a certain way versus when it's broken out. Right now, like sports side is one of them that comes in all at once. It doesn't tell you how it's broken out. We have to go and break it out, which is a way to streamline a few things to make it so it's easier to get these financials out on a timely basis so that you can make decisions that way.
Gary, I would add that Jamie kind of came in basically after the end of the fiscal year
Yes,
as our new finance director. So not only did we have the suppression of time between the issuance of the audit report and the year end, but also we had a change in our finance director. It coincided with that, so.
very, very much so, because as you say that, Mayor, because there were times we would look at something and go, we know this is wrong, but we don't know the backstory. So you'd have to go back and then we'd have to keep bugging John a lot. And poor guy, because like, you gotta tell us the story, what's going on here. I mean, just to break down this intersection and how all the construction and all the funding and everything. I mean, I had ended up having to give it to auditors. I'm printing here's a map and here's a picture of what's going on from Google Earth saying, okay, now this road's gonna go to here and then this road's here and these people fund this. And, I mean, it was the only way to diagram it because it was very complicated, but we got through it. So what we have in front is the financial statements, and they have been audited, and we'll let Ron talk about the audit and the things that they've had to do. And we really appreciate him and the efforts that they have done to get through this, because it took us a little longer than we thought it would be to get all this fixed, but Ron's come through on the audit side of it. So as you can see that if you look at the MD&A, which is the management's discussion and analysis, I'd ask you to just read those as the committee when you get some chance, and then if you have some questions, we can go over those. That's the first part of the document. That is something that is produced by management, and we go over what is kind of an executive summary of what has happened over the year to give people an understanding, because we understand that this document is 100 pages long roughly. If you're an accountant, you love it. If you're not going to get past very many pages. So that's why there's a management discussion analysis and allow people to. What? Oh my, what am I going to say now? No. Okay, most of us. Yeah, so it is really a large document to look at. And so if you look at the management discussion analysis, we call it MD&A, that will give you some kind of insight of what went on, and then you can always go back and drill down further into the financial statements. Your fund balances look where they're within code. And so you've got the receivables in there if you want to look at all the footnotes. This report will look different than last year's as a presentation wise. Last year, it was adequate. I'm not necessarily into adequate. I mean, we didn't have to qualify the opinion because of the way it was formatted. But there were a lot of weird formatting that was going on and a lot of different things. So when you go, it's in basically the same order, but it's hopefully in a way that it makes a little bit more sense to you. And one of the big areas you can look at is, the cash footnote that tells you where the cashes are and all that. The one that's probably the biggest footnote in the entire document is pension.
Yeah, Gary, could you spend about 2 days and explain that?
I doubt I can do it in 2 days. I'm not,
Yeah, it's the biggest footnote and it's about the least meaningful.
yeah, it's all a bunch of footnote on telling you how the actuary thinks that maybe things might happen in the future. So it's a guess, and then they try to give all this information behind it. Reality is all you really need to know is what is the liability out there, but you can't even do anything about that. Did you know that if you try to actually say, okay, this is our liability and we're gonna pay it down, they won't let you? Because the liability goes like this constantly. It goes up and down, up and down. This year it's a down year. Last year it was way up. And so we really never even know where that's gonna go. And we just book whatever the state retirement tells us to book, because they do all the actuarial, and it doesn't really change anything that you're doing. And I mean, it's a very interesting footnote to say the least.
So Gary, just a,
Does it have to do with what the investment
Yeah,
that funds are
yeah.
in?
Discount
It all
rate.
depends on what they're gonna invest and what they get.
And how the market and whatever
Yeah,
else does.
Yeah,
and the discount rate they use.
Yeah.
discount rate, that's a big one. And they've changed that over the years. And the good part is there's one little tiny maybe, and Ron's probably has a different opinion, but maybe a little part that I think is okay, where it says, this is the sensitivity of it. Saying, okay, this is what we decided, but if you look at what 1% less in that discount rate versus 1% greater, you will see quite a swing. So that's why you go, well, where is it in this huge range? The good part is, as a council, you don't have to do anything with it, because you just have to make your payments every month to the URS, what they tell you it has to be. And there's nothing else you can do about it.
I always tell this story. 10 years ago, when I was working on the governor's committee for efficient and effective government, the state was underfunded $6 billion. And, it just varies based upon return on assets and discount rate. And I was a little bit surprised at the discount rate they used, though. I don't know where they came up with that.
Let's say, industry standard rate that they have to use, isn't it?
Well, as I recall, it was, what was the discount rate they used?
I'll tell you what it is.
6, or was that the return? I can't remember.
I think, I know GAAP is different than governmental, but under GAAP, there are indexes out there.
And make-
paper that you use.
I don't know. I don't audit the URS and never want to. Well, that's serious. I
Companies
never
have
want
just
to.
gotten away from defined benefit pensions. They do
I mean, they-
defined contribution. They don't do.
Yeah, these are defined benefit plans, and that's why there is the huge, and, it's actuarially done, because it's not just this is how much cash will go out. We can do that with a contribution. Defined benefits, it is. Yeah,
You hear some of these Midwest cities are in terrible shape with regard to these things. Who protects us from getting into that kind of, is it the state organization then that protects us from getting into that kind of a problem?
yeah, it is, because each year what the state retirement does is they go through and they analyze basically the cash flow that they're gonna need. And and how much they need to fund. And then they start to change the rates that every participating organization has to pay. And they're not equal. Now, understand that in the state retirement system, there are many subsystems within the whole state retirement. There's public safety, there's firemen, there's judges, there's the normal people that work. So they have several different sub plans in there. The fireman one is fully funded and actually has excess. That has a lot to do with that every time you do your insurance on your home, part of that insurance goes to fund the retirement there. I got that directly from the state retirement. I couldn't figure out why that was positive and nobody else is. Well, that's because they get extra money. The police, you pay on the police versus, you can have somebody on tier 1 and tier 2. There's 2 different tiers, but tier 1, you can have 18, almost 18.5% of their salary has to go. But for a police officer, can be up to as high as 35% of their salary has to go in. So each group also has to pay different.
That's because they retire so early, isn't it?
It has to do with their retirement time. And they
After 20
expand
years,
it.
that's,
Yeah.
you can have a whole nother career after that.
Yeah, so I mean, it's,
Yeah, I've seen funding go from overfunding 105% to 90% a year, just depending on the
yeah.
various discount rates and estimated return. But Gary, just a quick question. I guess what I'm interested in, and I'm sure the auditor is too, and by the way, we probably ought to introduce everybody. I'm not sure I've officially met everybody. We've passed in the hall, I think, but so you spent a lot of time. I know Jamie's excited to kind of have things with a fresh start. Do you feel like pretty much everything is, I mean, nothing's perfect, but do you feel like we got everything reconciled and we've got,
Are we up to kosher?
yeah, are we gonna be, now that we have a full year ahead of us, what are your feelings?
Me?
Yeah.
Yeah, I think that we went through virtually every account on the balance sheet and reconciled it so that we knew what was going on in it. That's why all those entries. So I'm thinking that we got, as of the end of June, the books are in really good condition. We're able to, yeah. Sorry, I will mute. So we've gone through a lot of the areas and I could address some of the areas for you. I know that you probably have concern about like what the Marriott thing is and some of the transfers that we've done, but and why there's some funny things on this report. And I'll show you one spot where you have to do a conversion that's really odd. But for the information coming to the council, I think we have to go through right now and then reverse a lot of entries that we did for the audit, the accruals part, get it back out so we have to true it up for the current year. But yeah, once we get the first quarter and everything reconciled it back out from getting the reversals we have to do, I think you're in much better shape. I think the numbers you're going to be seeing are going to be ones that you can make decisions with, even though you have been in the past, but
Just a higher comfort level of making the decisions.
yeah, it is.
And just a reminder, you come in twice a year. You come in right before year end to help us, and then mid-year, I believe.
Yeah, I think
Our
it's
engagement is that you come in twice and make
two or
sure.
3 times. I'd have to go look, but
Yeah.
whatever.
You can come 3 if you want.
Yeah, that's fine. Just won't pay. No, okay.
That's a good point.
No. Yeah. And, but so, yeah, I'm not because Jamie's here, but Jamie understands a lot more than in the previous director understood.
That's why we have Jamie there and we
Yeah.
don't have a previous
She
one.
really has the understanding of what the debits and credits are. If she didn't understand it, she asked me, we went through it, and really, I tried to say, okay, this is not just getting books, it's getting education. And so, but she's a fast learner and she's picking this up. I think from my own perspective, I think she's a little overwhelmed with everything that she's got to do, but that's part of being an accountant. You get overwhelmed. That's what happens.
And I believe we've added additional resources to help her too. We've hired another accounting person. They started yet, John?
2 weeks.
Sorry.
So if you don't mind, Mayor, I can address the Marriott issue if you'd like me to, or we can let Ron speak and then we can go over it. So whatever you like. Whatever, Chairman, whatever you guys would like.
I think I understand it. I was unaware that we were putting the assets on the books, so I understand the deferred.
Even though the word sounds backwards,
Yeah,
right?
it is government
I
accounting.
know. A deferred outflow, why is that an answer? So, yeah, Mr. Chair.
So let's turn the time over to Ron Stewart. Thank you for being here.
Thank you.
Auditor, especially.
Wow,
Turn it over to you.
great. Well, my name is, like I said, my name is Ron Stewart, and we're with Gilbert and Stewart CPAs. We've been around since 1973 is when we started. I've been practicing since 1999, so I have a few years of experience. We're excited to be a part of your city and provide these services for you. What I'd like to do is just take a couple minutes and just kind of tell you what we do, what we do as auditors and what our job is. And then we can talk about some of the conclusions that we came to as we did that. So there's really 4 areas that we look at as an auditor. One is to make sure that the financial statements are materially correct. And you can rely on those. And we've talked about that and the work that's gone into making those that way. And so we'll perform a number of tests on those balances to make sure that they're accurate and that we can run out. The second thing we do is we're going to look at internal controls. We want to make sure that those are that they're designed, that they're implemented, that they're working effectively, that it's protecting the assets of the city. We're going to look at state compliance to make sure that you're compliant with state law. And then the fourth one, if you receive enough federal dollars, you're required to have what's called a single audit. So those are kind of the 4 areas that we look at. So as far as the financial statements go, we come in, we take a look at the trial balance. After all the work has been done to get them ready, then we come in and camera apart and be up on them and ask lots of questions. We send out confirmations, so we will send out a confirmation to a third party. Say, does the balance you show match the balance that we show? We'll do that for cash, accounts receivable, long-term debt, some of those pension liabilities, those accruals. We'll make sure those are confirmed and that we're matching up to what our books are showing. We pull a whole bunch of invoices. At the beginning of the year, we'll pull just a sample of invoices. We'll look to see, does the check match the invoice? Does it hit the trial balance right? Is it in the right period? Does it have financial statements? And we'll just kind of look and evaluate those as we begin the audit. That also helps with the internal controls. Are we following the procedures? Are there proper approvals and those kind of things as we're flowing those through? And we do that for those invoices. We'll look for like capital assets. Pull those invoices for those. We'll look for capital and for accounts payable. We'll pull a large number after the end of the year and look and say everything that was written from July to now. Did the service happen in the right period? If it did we post it in the right period? Do we need to approve back? Some of those invoices we'll look for in those areas just to make sure that things are right and they're posted in the proper periods. We also do analytical reviews. So we'll, at the beginning of the audit, we take a look and we go this year, last year, the year before, we create some expectations of your growth rate is this. We should expect you to see growth here and your growth was here. And then we start looking and evaluating those and saying, what are those differences? We ask questions, start pulling samples and doing tests to see if we can understand those differences and actually designing our tests to look at those to make sure that we're catching those. As we're actually doing the test of the balances, so if we're looking at cash and accounts receivable, we'll do that again. We'll look and say, just in cash, what did it do? Can we reconcile? Can we understand the difference? And then at the end of the audit, before the financial statements are finished, we'll look at those and compare those kind of on a high level, financial statement to financial statement, and say, did we miss anything? Can we see on this level, can we reconcile and adjust it? Be able to answer all those questions. So it's kind of what we do with analytical reviews, and that's really helpful for us. And then we also do recalculations. So there's a lot of calculations that go into a financial statement. You're looking at depreciation lags, you're looking at accrued payrolls and pension liabilities and those kind of things. We're making some calculations. And we'll go back and recalculate those. We'll pull a sample and say, okay, the truck is depreciated over 5 years. This should be the depreciation. Is that what it's showing? And recalculate those balances. Your wages payable. Here's the number of days that should have been in June. Here's the number of payroll. We'll recalculate and say, is that reasonable? Does that make sense for your financial statements? So those are the tests that we perform, plus several others that we do through the course of the audit to help us get to a point where we can feel comfortable that the financial statements that you have in front of you, that we can rely on, their material correct. So if you look at first page number 1 of the document, which is our audit report. This long paragraph at the bottom that says opinions. It says, in our opinion, the financial statements referred to above present fairly in all material respects, the respective financial position of the governmental activities, business type activities, each major fund, and the aggregate remaining fund information of North Ogden City as of June 30th, 2021. It talks about respective changes in fund and cash flows, budgetary compliance. But basically what that's saying is that that's an unmodified opinion, a clean opinion, or the best opinion that you can receive. So bottom line, what that means is all the work that's been done behind. When we came in, the tests we performed, we looked at this document and said, after all has been said and done, we feel comfortable that you can rely on this as a material correct document. The second thing, as far as internal controls go, we want to make sure that the controls are protecting the assets of the city. And so we do interviews, walkthroughs, questionnaires, to try and get an understanding of what the controls are. And then we test those as we're doing tests of other balances. We don't give an opinion on internal controls, but we do evaluate those as we go through the audit. And as you're aware, in the prior year, there's been some findings, material weaknesses and significant deficiencies. So this and in writing would be where we would come and say, here's the issues that we found and the findings that we're going to present to you. Through our interviews, through our walkthroughs, we didn't feel like there was anything that would rise to that level of material weakness. So I know in the past we had a material weakness over financial reporting, talking about the reconciliations. As we pulled our samples, as we asked for reconciliations, we felt the balances were reconciled. We could rely on those reconciliations, obviously, because of the work's been done between Jamie and Gary. So there was also material weakness on the financial statement themselves. And there was a significant number of work that needed to be done to get this document in prior years to actually be in compliance with accounting standards. We felt that the draft that was given to us and the work that was done, the financial statements were actually in compliance with government auditing standards and generally accepted accounting standards. So we don't feel like those are findings that we need to bring up in this situation, because those have been addressed. We feel like that they've been mitigated. Some of the other issues during last year, there were several state compliance issues, and we can talk about those in a minute. But I don't feel like there was anything that we needed to bring to you tonight that would be considered a material weakness or significant deficiency. So bottom line is, I think that you've made the changes. Now I will say that we tried to look at this as of when the changes got made. We didn't go back to July and August and say we're out of compliance, because that to us defeats the purpose. We're just beating you up again for something that you already know. So we really looked at is when you knew and when you addressed the issues, are we now in compliance going forward? And we felt like you were in compliance going forward, which means you've addressed it, you've made the changes, and we're comfortable that's going to go forward. And we'll address that again. We'll look at these same things in the future, in future years, to make sure that we're still doing it. The internal control isn't just a one-time thing. It evolves as the city changes and as things come about. We need to kind of evolve those controls to make sure we're controlling those assets. So these will be evaluated every year, and to make sure that we're continuing to be in compliance. The third thing is the state compliance. So state auditor says, here's areas within your city that we need to look at. Some of those are looked at annually. Some are looked at every 3 years, every 5 years. So in a 5-year period, all the areas are evaluated and looked at. But the auditors have said some of them are more important to them, so they're doing it annually. Every year we look at those, and some they say every couple of years we need to address those. So if you go look at page, it's in the second document. Page 3, this is report on internal or on state compliance. Things that we looked at this year were budgetary compliance, fund balance, fraud risk assessment, justice court, restricted taxes, government fees, cash management, and impact fees. So those are the areas that we looked at. They give us prescribed forms and procedures to perform, and they say, okay, cash management, you do this, and this, and you tell us whether they're in compliance or not. We also, in addition to this, we went back to the findings from last year and reevaluated those to make sure that those findings are being addressed, and that we could be comfortable in saying it's not a finding anymore. So, you know, the minutes, we went back and pulled a sample of minutes to make sure they're being posted to the website. We looked at, remind me, does anybody, do you have the?
Oh, no, fine. Yeah, I can get it.
Trying to remember what those other findings were. I apologize. I had my management letter sitting on my desk and I grabbed everything and walked right out of it. So I apologize for that.
That last year?
Yeah. So we scroll down to the state compliance part. Okay, so the Open and Public Meetings Act we addressed. We wanted to make sure that the minutes are being posted within the time frame and that they're out there. So we pulled a sample of those and felt comfortable those are being posted to the website. All the treasurer's bond, we did confirm with Jamie that they went out and increased that treasurer's bond. So we feel comfortable here with the lines there. Okay, fund balance. There, if you have a deficit fund balance like you do in the CDA fund, the state requires that you appropriate to spend 5% less. So you're eating away at that deficit fund balance every year of your annual revenues. So the revenues for 2021 were about $100,000. And there is a line item on budget 22 to appropriate 5% of that. So that's what the state requires. You know, they don't like negative fund balances, but they're saying if it happens, then you're in compliance as long as you're continuing to eat away at addressing that and getting that fund balance back in line. So we felt comfortable there. And then general fund in excess. So the state has said you can't have more than 25% in prior years. They just changed that to now 35%. You can't accumulate that in the general fund. It has to be returned, spent, or as everybody does, put into a capital projects fund and appropriated, saying, hey, we're going to spend this to build a park or whatever it is, to make sure those funds are appropriated for something, not just sitting there. And then the budgetary compliance, confirmed again with Jamie to make sure that those minutes or the financial information is coming to the city council on a monthly basis now. And then you're receiving more detailed information on a quarterly basis, which is also in compliance with state law. So, and then the last one is interfund loan between the CBA and the RDA. And we made sure that there was a formal agreement that has been signed and implemented. So based on those findings, we feel like the city's addressed those and that we don't have to continue to say this is a finding again. We can address those and mitigate those situations. And with the compliance issues that we looked at this year, we didn't find anything that we needed to bring to your attention as an additional state compliance issue. So we feel like you're in compliance there. And then the last thing we do is the single audit. So if you receive more than $750,000 in federal funds, then you're subject to this single audit. And basically what it means, it's compliance to see, did you spend the money the way they wanted you to spend it? And there's certain ways it's allowable. There's certain criteria that you go through to review those. And mostly it comes from the actual funding agency. So most of the funds came from the Department of Treasury. So they will come out and say, here's the things we spend it on. And we need to go test and see, did you really spend it the way you should have? Obviously, the reason that you got the single audit was because of the CARES Act. We got 3 tranches of about $500,000 each. One was in the prior year, we used payroll from from the police department, excuse me, to pay for that, or that's how we spent the money. The second tranche went to Weaver County for business levels. So we traced that. And then the third was also used for police wages. And so that's how it was allocated. So we performed tests on those. It was pretty broad, what the Treasury said. They gave you a bunch of money and said, if you can justify a reasonable way to spend this for first responders, was obviously the easiest one, or personal protective gear. And those are allowable expenses. So
And we did fund some salaries of the fire department too.
correct.
So,
Correct, yeah, those hazard pay, absolutely. So through our testing, through our evaluations and the review of those, we felt like we were in compliance with the federal requirements. So there's no findings that we need to bring to your attention. During this federal funds. So those are the four things we do as auditors. Those are kind of the conclusions that we came to. Those are procedures that we went through and kind of what we did. I'm happy to answer any questions or talk more about it.
Sounds like a good report to me.
it's surely a better report, but I think we have Gary,
Unraveling
yeah.
that Gordian knot that took the 500.
Well, and I appreciate Jamie's humility too, because she's indicated Gary is teaching her a lot and she's learning a lot. So we surely, Gary, want to know we appreciate your efforts in helping the city. I do have two questions, Mr. Chairman, if I could ask those quickly.
Sure. And then Thane, did I see you?
I do have a question.
Let's go with Thane first.
No, please go ahead.
It's
Mayor, go ahead.
beauty before age, so go ahead.
Well, then I gotta go last on that.
I think you've got him on both.
The chairman is, I guess, asked me to go. I noticed in here, there's a line item on prior period adjustment, which I'm not used to seeing. And then there's this thing that I fully don't understand here that I'd like an explanation on. It's adjustments to report the cumulative internal balance for the net effect of the activity between the internal service fund and the enterprise funds over time.
Yeah.
So I just had, I'm just a curious fellow, so I'd like to know what the prior period adjustment resulted from, and then what is this shortly explained adjustment to the enterprise funds?
So last year, when we were doing the audit, we inquired as to if there was any kind of inventories. We were told that there were no inventories. As we were sitting down, getting things put together for the fixed assets, saying, okay, what are the things that we need to, that the utilities have done, their pipes and all that kind of stuff, what do we need to capitalize? It was brought up that, well, somebody had gone out and bought a lot of pipe, and if you guys said that for projects that, so basically you bought the pipe in March, April for projects that were going to happen in August and September. Then all of a sudden said inventory, right? All of a sudden we went, wait, that you just created inventory. Well, then, so we started to inquire even more so, and we found out that there really was an inventory last year. So we had to go back through and have them go back and try to estimate what the amounts were for this year, what was last year's, what did we buy during the year. So because there was not inventory. Now, inventory is a little bit different in these governments than it is in a retail store, right? Because it's not something that turns over very fast. You buy meters, you buy pipe, you buy fittings that sit there, and it can grow after a while that it can be actually quite a number. And it was enough number that we felt that we needed to have a prior period adjustment.
And what was the enough number? What did that add up to? Since, it's spread across
About
different.
81,000 in the water and about 38,000 in the internal service funds.
Like Dave bought that to get the price back then.
Oh, yeah, we
Yes.
saved
No, it's
a
smart
lot of
idea.
money.
Genius.
Yeah, it was
But-
a smart idea, just
It was
create an
an
inventory.
inflation hedge.
Maybe it's just
Pretty brilliant.
me from where I came from, but those don't seem to be material. I mean, you're talking $100,000 on a balance sheet of millions. But anyway, you've explained what it is. But I'm just used to a higher materiality factor, I guess.
Yeah, and because in a government scenario, like the internal service funds, they're their own materiality. Because you can look at the whole financial statement and say, well, yeah, that's a lot, but it's all off opinion units. So it's by lines that are in there, not by a summary of it all. There is a part of it when you do government wide, but not at the fund levels. They're their individual materialities.
I'm just looking at the assets, water 26 million, sewer 12 million,
Yeah.
storm 15 million, solid waste 700,000. And associated revenues are pretty substantial in those.
But we
Anyway,
probably
you've
could've-
explained.
We probably could have, but
So I'm excited for the second one, Gary.
yeah. Second one, wow, okay. This is a really strange thing that happens in the conversion from fund financial statements, which is what the general fund, water fund, all those because there's two sets of financial statements in these financials. There's the fund financials, and then there's what we call the government-wide financials. The fund financials have differing methods of accounting. One's accrual and one's modified accrual. So to compare everything to say, what is the whole city look like on one type of accounting basis, there's a government-wide. And when government-wide happens, you take everything from whatever it is, and you move everything to accrual. And then there's, at that level, they try to break it down between governmental and enterprise fund, basically, your utilities. Well, typically, the internal service fund is an enterprise fund. So it's in this one category of types. When it moves to government-wide, because it shares the internal service fund is used by both the governmental funds, like the general fund, police, and public works and all, and their vehicles and all that, and also the enterprise funds because of their trucks and whatever else goes on. Now you have over there, it's a mixture. It's got revenues and things coming in from both sides. So when you make that conversion, Mayor, and you move it from the enterprise funds over to a governmental fund, the debits and credits actually don't balance. Therefore, I'm just telling you the truth.
My heart is broken.
Therefore,
Debits always used
but
equal credits.
these don't, right, Ron?
My heart
They
is
don't.
broken.
When you make this conversion, it does not balance. So in the great wisdom of the accounting standard boards, they created what is saying, well, this is the plug number that makes a balance.
Is that a technical term?
Please don't quote me.
We used to call them
I'm
HO.
just trying to explain it.
We used to call them HOKs. Heaven only knows. So the effect of this is it's reducing the fund balance in the enterprise funds, if I'm reading this right,
Right.
to the tune of just under $250,000.
So what we have to, yes. And so.
So what does that mean from operating the enterprise fund? It means nothing.
See, over time, if everything works perfect over time, that will go up and then it will come down to zero, meaning that we properly allocated between the two.
It's a lot like a pension.
Yeah.
Okay.
Well,
Right.
that's pretty close.
Right,
But,
that would make
yeah.
sense.
All right, as soon as you said debits don't equal credits, you lost me, so we'll move on.
It's, sorry,
This is government.
are we where we should be?
Yes, it is.
There we
It
go.
is in compliance, and he double checked the whole thing because he was.
Like is appropriate. We've got a yes.
And isn't it? I mean, I hate to say that, but I mean, accountants, that's what I can tell you.
That's fine. As long as we're good, I just like to understand what we're doing, so.
Yeah.
It is the
Just trying to allocate between those two.
Sounds like accountant job
Double
security.
line.
Yeah, we need you. We can't do without you.
It's so confusing.
Yeah.
Sorry, Member Schaefer, you've got a question.
Thank you, Mr. Chairman. I have a question, it may be for Mayor Baruti. In the last meeting that we had, we talked about a lot of the deficiencies that were there, and I have to say that Jamie, you took Evan's place. I didn't know that till tonight, so congratulations, and I don't know what email I missed that says that, so congratulations. And But in that meeting, we talked about a lot of the deficiencies that you had found and in internal controls and in the treatment and following standards and those kinds of things. And we had a discussion, if you remember, Mayor, about whether or not Evan at the time even had the resources, time, and capacity to make all those changes. Now, here we are a few months later, and what I think I'm hearing is that all of those internal controls have been rectified, that going forward, we think that those are going to operate and we're going to report appropriately, that all of our reconciliations are completed and the accounts are all in good order, which I left here last meeting thinking that is a tremendous amount of work. I don't know how we're going to get that all done. And I think what I'm hearing now is Jamie's done that. So I guess my question is it being new to this committee, is it something that the committee should expect to receive reports on that going forward as far as making sure that those things are in place and operating, or does this suffice and we just go forward and wait for the next year's report?
I'll render my opinion on that. I think, Gary kind of got everything in order. We talked about that short time frame. We have got additional resources. I think we need to, over time, become less reliant on Gary, not to work him out of a job, but not to overwork him. And I think that Jamie would say there's still a lot to learn. So I would say, Thane, that we should get updated reports in our quarterly meetings.
Thank you.
And like I said before, these cities evolve and things are going to change. So I think having this discussion multiple times and always reevaluating how the controls are doing, are they working? Do we need to readdress those controls? Are they fitting now what the city is dealing with? Is very, very valuable. And that's what I would see the main purpose, one of the great purposes of an audit committee, is to really dig into the internal controls and say, are we really protecting the assets? Really, if things are working properly, then the amount of work that Gary has to do is going to be a lot minimized because the system is going to do it for him as we go.
And I would suspect that Gary, when he comes in, whether it's 2 or 3 times, will also join us in our audit committee meeting to give us a report on the progress. I think there's going to be we need to invoke some patience here. It's very complicated. We found out tonight that debits don't equal credits. That's
Mayor's mind is a little bit blown.
yeah, I'm totally off track. I might turn my license in now, but I do think we're going to have to invoke some patience here as we because Jamie's also going to bring on a new resource that she's going to have to get up to speed in addition to maintaining what we're doing and learning. So I would suspect, as Ron was saying here, that we would have regular reports on this in our quarterly audit meetings.
And it is not my intention to rush Jamie or Gary.
Right.
There seems to be such a change in the tone of this meeting compared to the last one. I wondered how that caught up so quickly. So well done.
Councilman Swanson would like to take the credit for that,
Oh, it was Councilman Swanson.
as his assignment as the financial liaison.
He's the man.
But I would say that I'm grateful that he is involved in that because he takes it very seriously. We've all got a lot to learn, but I would say to you as the committee too, it's not my intention to move Councilman Swanson's assignment at the first of the year away from finances because I think we need some continuity there.
I offered him ice cream and
The other thing that Thane pointed out was that we were going to get some help to the finance director, and it sounds like you've done that. This starts soon now. Yeah, because it sounded like it was a really big job last year, and it sounds like it's not going to be any smaller this year.
As Ed Sullivan would say, it's a really big job.
Also, he's going through the do one, do one, teach one. So she's not got to teach one, but she's doing it. So, bravo, Jamie. And thank you so much, Katie. That was just, when we saw that last time, I was like, oh.
I was quite dreading tonight. Oh, you're about 2 years in a row.
Long
Oh.
I'm the finance guy now.
No, when I saw the report, I'm like.
Oh, yeah, I felt much better when I saw the report.
Right. I was like,
Leading up to it.
yes.
Any other comments or questions then about the audit?
I just want to say thank you, Gary, and without you, we did a lot of work, so thank you. And Ron, it's been great to work with you. So thank you.
Thanks for getting our report on a timely basis, so we don't violate that with the state too by sending it late, so. I know,
He had to really work on that because he's got a lot of work right now on his plate.
Yeah.
And so I personally appreciate that.
Tis the season.
yes,
I think he kind of pushed us to the front of the line to get it done on time.
so,
that was-
and we appreciate that very much, and having been on the other side, you know, you see a report that seems simple, but we do understand the amount of work that goes in, so thank you very much.
Thank you. There's a real comfort to knowing that we're headed in the right direction.
Yep.
To actually know that we're headed in the right direction, not think we are headed in the right direction.
And that we're up to par.
The work that's been done is wonderful. Yeah. Okay, let's move on then to item number 3.
We could excuse Ron,
I was just gonna say, Ron.
if we could, Chairman.
Thank you very much.
I think I'll get home before midnight, so.
I'm sure your family will appreciate that.
He lives in Pro like that.
Oh, bless them.
I know. we live in the whole world like he did. Thanks, Ron.
Thank you so much.
No problem.
Merry Christmas to you.
And I'll just echo what everybody said, you know, these guys have really taken a lot of ownership and taken a lot on their plate. And you always know when they know, when you ask a question and they know the answer to it, or they know where to find it. It's a little disheartening when you say, hey, about this, and they're like,
The deer in the headlights.
Yeah, what is that?
let me get you on that. And it's like, oh, boy. But that's not the issue here, so we feel comfortable that you are headed in the right direction. So thank you very much.
Thank you, Ron.
Drive safe, please.
Thank you.
Thanks.
Okay, we're gonna turn over to Jamie then for our quarterly financial.
You bet I'm sticking around.
This is too
much fun.
Your birthday is his birthday.
Third, you want one?
No, I've got,
Well, flyers are black and white, I thought I'd print them in color, so you can see them on page. But just want to discuss the first quarter, so July through September. There we go. On this first slide, this is just the overall status of all the major funds. What we're looking at is the percentage of revenues and expenditures for each department compared to the budget. So right now we're at 25% of the year, and as you can tell, like the general fund, the revenues are coming in at 17%, and the revenues are at 19%. The aquatic center revenues are 30%. Yes, 19%. Yeah. So this probably changed quite a bit, just some of the journal entries and stuff that are happening. And then just for clarification, I also took out like ARPA money, those kind of outliers that don't apply. So just so that we can get down to the nitty-gritty of what we need to look at. The aquatic center at the end of September, revenues are 32% and expenditures of 41%. Just keep in mind a little bit what Gary was talking about. We still need to finish some of the audit work. So these numbers might change a bit as we do some of those reversing entries. So just bear with me on the aquatic center. We'll be able to come back, I'm hoping quite soon with the numbers on the aquatic center. The water fund, 24%, 28% for expenditures. I believe expenditures are a little higher just because we've had a lot of water line breaks this year. So those expenses are like about 50% already at the end of at September. And as we get in the colder months, it seems to be getting a little more. And then also,
Does that reflect that you do more work on the water lines in the summer?
You know, kind of just happens when the breaks happen.
But,
And some years.
but don't we do somewhere we're putting in new lines as well,
So
replacement lines?
that's correct. We also actually, we see more breaks in the fall and winter as everything cools down. The pipes flex and move more and we get more, most of our breaks happen in the first, and by the end of the second quarter. And then everything stabilizes and the rest of the year it mellows out.
But the replacement work goes on more in the summer?
Correct. Yeah.
Repairs and winter replacement.
And that's our power was pumping costs were a little bit higher. I think it was just the year that it was with all the water issues we were having. Sewer seems to be pretty much, I wanted to point out too, the water fund, the actual utility line revenue was right at 25%. So I thought that was something to look at, but the overall revenue line was 24%. Just the sewer fund revenues and expenditures equal, and overall the fund looks like it's on target. Don't really have anything that stuck out to me on that.
That's what we want.
Right. The stormwater fund, revenues 23%, expenditures 28%, a little higher. And I think it's just mainly due to capital projects. There's some other line items in there that were higher, but it was more like a travel expense or something that we've already expended so much on at the end of September. So, then again, the solid waste, there the fund looks good overall. On the second slide, it says general fund. This was just to break down a little bit more of what's going on in the general fund. So general tax, basically our sales tax, we're at 20% of budget. We did just receive property tax in December, so that line item will jump up the next quarter. Licenses and building permits at 36%, and just a note here that building permits are at 37% of budget, so they're coming in a little higher. The intergovernmental revenue, 14%. Charges for services, 60%. This makes up recreation, plan check fees, subdivision, zoning fees, those types of things. So they're coming in pretty high. And again, this is the recreation fees that also affect the aquatic center. So we still need to analyze that. Fines and forfeitures, 24%. Miscellaneous 11%, and then grants and transfers. There's some grants out there that we just haven't, time. We'll get them, but it's time. And then also you can see that the expenditures, roughly around 25%. I'll just call out a couple of these. The council, the reason why that's higher is elections were this year, and we paid for them early on in the year. Same thing with non-departmental liability insurance that we have to cut that check right in at the beginning of the year, so that takes up quite a bit of that budget. Public works. So this one is interesting. So basically, this is where public works heavily supports the enterprise funds, and we have that admin transfer, which are included in here. I know those are guidelines. But we did include them in here just so that we can get a good look at what's going on. And because of that admin transfer, basically we're taking public works expenditures and applying them to the enterprise funds. And so it just reduces that line item down. And then our transfers out, again, the only transfer out right now is just the B and C road funds that get transferred over to capital projects, and that's just what we've received so far in the year. Next slide for the quarterly sales tax. Basically, we're 20% higher than the projected budget, and sitting about 10% over last year. However, I did get the file today. I don't know if everybody saw that. Revenue. So the 19% is now about 17.5% for October. So I didn't get a chance to update the slide, but Or sales tax is still holding strong. Okay. All right, so the last slide about the finance department update. So some of these we've already talked about. We have implemented a new accounts receivable module in our accounting program. This is new this year for the city. We started doing this, and I think we implemented it in August when we finally got up and running. And all the invoicing throughout the whole city now is running through our city treasurer. This is going to help with that reconciliation with fire hydrant deposits, those types of things. This is new, where before we were tracking it on a spreadsheet. So now actually, it's the purchase order module is also new this year. We tried to kick it off in August as well, but we couldn't get on it until December. It's currently in a pilot program, if you will, with the water fund. They're gracious enough to help me out, look at all the kinks and whatnot before we implement it out. You know, they make a lot of purchases and it's going great so far. And
Is that the best one to start with? Do they have?
yes,
Okay.
they're very resilient. Like they
Okay.
can change with me on a dime. However, we need to change things. They're out there. They're really great to work with. So, the idea is, you know, to decrease fraud risk and increase financial turnover information, month-end, year-end information. I can't tell you how many times I had to tell Gary that we're changing the accounts payable number again because we were getting invoices in late. I mean, even into early October for the prior fiscal year, and we just gotta take that away. So this is supposed to help tremendously on that, so that we don't keep changing that number.
Fatherly over the glass.
So we do have a new accountant starting. Her name is Christy. She's starting on January 3rd. We just decided we need to take the position from an accounting technician position and just make it a higher level with more accounting work. And then also, since I moved into the finance director role, as treasurer, I did a lot of the GL reconciliation work. And then so this account position will take on more of that, just because our current treasurer is tasked with other duties. When I was treasurer, those were my roles, and those aren't his roles, if that makes sense.
Do you feel like the roles are pretty, I mean, before we were kind of struggling because people were wearing way too many hats. Do we feel like with this one, we're gonna have?
I think Bryce is pretty happy with what he's doing. He does do the cash receiving, as you know, he does do those duties as treasurer, cash receiving, accounts receivable, those types of things. And then where he's not doing a lot of the GL entry work, he is able to do some other things, especially with like utility billing. And I think now he's kind of getting into the more IT, those kinds of things. And then managing his team. So I think he's doing really well with what he's doing. I can't imagine the accounting side going back to that position. And so that's why we figured this account position is heavily needed. Before it was just really the accounting technician, just like an AP clerk, if you will. And so with this new position, we'll take on more of the accounting roles, a little bit more payroll, those types of things that I was doing as a treasurer.
Because it feels like we kind of mishmashed odd things together and gave them to people. You know what I mean? It's like, here, you be in charge of this.
Well,
I think there was still some of that.
because we were smaller and less complex.
Yes, and so now we kind of unraveled these and got them so that we.
So Bryce does wear many hats, and you know, I think now Katie does too, and
And we all do what's needed. I mean, that's the thing that I have just been so impressed with our staff. It's like you kind of, like if it needs to be done, you figure out how to do it. So I just, you know, as a council, we're trying to figure out, do we need more help? Do we need different help? We're trying to get you what you need to do your job and do it well and decrease frustration.
Sure.
And so.
Yeah, no, I think this position, I think we got the right skill level that we need in that position. And I think some of the things that we've discussed tonight about moving information along is, I think it's coming. I think we'll see a big turnaround real fast.
We like people to be happy in their jobs.
It's not a problem.
A fraud risk assessment. So last year, I think we did really well. We were at, our number was 320 out of like 395. So we're at the low, and then there's one more category that they call very low. And the number we need to get to is 355 points. And the great thing about it is that the treasurer is working on a cash receiving policy. And the HR department is working on the ethics policy, and both of those should be coming to the city council, hopefully in the first part of January, maybe February-ish.
Word for ethics, the ethics one.
It's a, yeah,
Okay.
yeah, and fees are going to increase that score, so I'm really confident
We can get in the
that
big
we're gonna get into the very low category.
Who measures that for us?
There's a rubric that I don't know if rubric's the right word, but there's a scale that the state puts out, and you have to fill that out, and then they're in the finance
I
director.
remember filling out a survey.
I have a
And
copy.
they put a number on it.
I have a copy of last year's I can send out so that you can see what that entails.
So this measures our danger to have a fraudulent activity or something.
Yeah.
It's kind of like your accounting controls.
Yeah.
Like
internal
do
control.
you have internal controls that make it so that it's,
Very
as
hard.
difficult as possible to commit fraud?
And they talk about, education, make sure we have the right skill level on staff and, I mean, even the mayor gets to count. You can do that. The mayor counts.
You count for once, Mayor.
Well, I'll take whatever I can get.
Jerry, I would like to see a copy of that.
Okay,
Last year.
yeah,
That
let's
would
send it
be
out to the
educational. Thank you.
And then just as a reminder, we do have the fraud hotline available. There's an email. You can also do snail mail. There's more information on the website, like contact the mayor, city council, or whatnot. So I want to make sure that that's out there. And then I would like to ask if we can set up a meeting in January or the first part of February, so that we don't get too far out with the second quarter. I know that that's probably the most pressure on me, but I don't know what schedules
We
are.
just listen to your reports, Jamie, so you tell us when
Well,
you're
that
ready.
leads us right in, before we move right into number 5, which is meeting schedule.
Great, oh, there you go.
There you go. Any comments or questions about item number 3 on our quarterly financials? Randy? Councilmember? Mayor? John? Okay, let's move on then to number 5. Audit committee meeting schedule. Mayor and I had talked just recently and still feeling we're gonna kind of put it in stone, that we'd like to meet on a quarterly basis to discuss where we are, where we're headed, what's upcoming, and like you said, not be too far out from the previous quarter. So looking at probably first week of February, can you have everything ready by then? Is that too much?
Yes,
I won't. If it's too
Let
soon,
me
you
tell
say
you.
so.
let me tell you, I have to just say this, because I'm gonna geek out. November went fantastic. Like, I can't tell you how excited I am about November, and December is looking the same way, so I'm feeling pretty good about the audit.
On a dawn or
I
something.
will actually sleep tonight, so.
That's awesome. So everyone, look at your calendars. Can we do the first Tuesday in February?
Last year, we decided to do it quarterly, but it didn't happen. Is that because these reports weren't ready? Is that
The
what?
reports weren't ready. We had changes in staffing that were going on.
So we weren't
We
prepared to
were
have a
addressing
meeting.
a
really.
whole host of issues, and it was like, we could meet and say, we're addressing a whole host of issues,
Yeah.
without really being able to tell you what we were doing.
We should be able to have regular ones now.
February 1st is the first Tuesday.
I'm available February 1st.
Okay, is that the date, February
Right.
1st?
That's first Tuesday.
So February 1st, 6 PM here in the council offices.
And so with that, I'm assuming we won't be doing a work session. We did have a group asking to do a work session with the council in February, but we could move that to another night possibly.
We could move it to Wednesday, which is Groundhog Day.
How about February 2nd?
That's
How does that work?
that's
So planning commission will be, so,
February 2nd is fine.
No, that's
We
fine.
could be downstairs in the conference room, right?
sure.
Be okay to, how would we do recording stuff?
Oh, we couldn't Zoom. Because we'd be Zooming 2 meetings.
Would Wednesday be a possibility? I like Wednesday myself.
That's planning commission or the second Wednesday maybe.
So we could do the second Wednesday, the 9th.
Actually, Wednesdays are better for me too.
Okay, so the 9th would be better for recording purposes and all of that? Okay, Wednesday, the 9th of February, do I hear the 9th?
I am. Sorry, hold on. I'm actually out of
We can-
town. I'm out
We
of
can also
town.
move the work session just to another day in February.
That's what I was.
Let's do
thinking.
that.
just
Let's-
leave that.
Mayor, are you okay with that if we move that work session?
I'm fine.
So that we can get this committee together, so we're back to February 2nd, I hear it too. I hear it too.
February 1.
February 1.
February 1st. One, not two.
Okay, I said I was okay. I have a hearing committee.
What's February 2 look like, John?
That's planning commission.
Well, if we
There's the
move the
third.
work session into the 15th, which is normally our off night, do we do that?
Well,
Yeah.
committee member Schaefer can't be here on the 1st,
Oh, he can't be here on the first either.
Right.
Okay.
What about Thursday, the 3rd?
Thursday the 3rd, okay.
I will be out, I'm leaving town that day. I'm sorry.
That's more important than the audit committee meeting?
It wasn't, and I
Okay.
found out debits don't equal credit.
Yeah, that's not important.
My whole life has been a farm.
No. So you out on the 10th, which is a
And I'm
Thursday.
still, I'll be returning on.
Oh, I forgot. Yeah, it's a credit union I work for. Yeah, okay.
I'm not sure what you mean by that.
Well, I talked to Kerry Wallen, so I kind of know how the credit unions.
I am leaving
That is
town
your
on
check.
February 3rd and returning on February 12th.
What day of the week is it? 12th?
It's a Saturday.
Saturday.
Oh, it's Saturday. So how about the following Wednesday?
That would be the 16th.
That's planning commission.
That I could do it.
That's planning.
How about the 17th? It's a Thursday.
Yes, I can do that too.
I'll make it work.
Okay, so we've got a 17. Mayor, we'll zoom you.
You know, that's, oh, yeah.
That's great.
Council member Ekstrom, committee member Ekstrom.
On this
17th?
Thursday, the 17th, yeah, it's fine.
Randy, Danny, 17th, Mayor.
Yep.
Jamie,
Okay.
Susan, John.
Yeah. I don't plan that far out, so yeah, that'll work.
It's the Thursday before President's weekend.
Yeah. I'll be here.
Okay, so 17th, 6 PM here in the council chambers.
6 p.m. Thursday.
Yes. Between now and then, we'll propose dates, February, March, April, May, for May. That we'll put out a couple of dates to see when everyone will be around so that we get that planned, rather than waiting until February to try to plan it. All right, public comments. John, anyone from the public?
We do have one, no raised hand yet.
No raised hand, we'll wait just a moment here.
Still nothing.
Okay, we'll move on to item number 6. 27, committee member staff comments, council member action. Gary? Andy?
Well, I think it's nice that we had such a positive report for the city. I mean, I think it's a compliment to the council, it's a compliment to the staff. And yeah, I think this is a wonderful report. And altogether different than the one we had last year.
Yes.
Earlier.
Pleasure.
I've spent my entire career as an accountant, and I've been many times in this situation where we're playing catch up and working late nights and trying to get things in by deadline. So I'd like to commend you for getting this done and making it look so clean and where it's at today compared to the last time we talked about it. Through personal experience, I understand the amount of work that took. So thank you and congratulations.
Absolutely. Mayor.
I don't want to prolong things, but I would just say, in an overall situation, that the finances of the city, not perfect, but we were able to transfer, I think, quite a substantial amount out of the general fund this year due to, the budgeting process and the department heads watching very carefully, which allowed us to inject quite a large amount of cash into our major project this year, which is the public safety building, reducing the amount of debt the city has to incur. So I think that's a team effort, and just like to acknowledge the entire city's response to what they knew was a very important situation.
Thank you, Mayor. John?
No, nothing. Just thank you for coming and reading these boring documents and being prepared to have a discussion. It's very helpful. So thank you.
Jamie?
Oh,
Thanks, everybody. I appreciate it.
wait till you write the document. It's boring.
Yeah, we're working on checks and balances in the recorder's office and just making sure, like minutes and things are properly done. It's not perfect, but trying to do what we're supposed to.
It's document.
Well, I feel like I've looked into the cabin of a 747 and I'm starting to understand some of the dials.
At least the on-off switch, right?
Well, I've learned that the on-off switches don't balance.
There's like.
And they're off doesn't always mean off.
It's hard.
true.
It's hard.
With that, I'll entertain a motion for an adjournment.
So moved.
I'll second it.
Moved and seconded, all in favor?
Aye.
Any opposed? Thank you.